Welcome back. Our guest today, Sean Brodrick, is the resource strategist of the Oxford Club, which calls him the Indiana Jones of natural resources. You'll see why in just a minute. His work has taken him from diamond fields north of the Arctic Circle to an ancient city of silver in Mexico, to the frigid southern tip of Argentina, and just about everywhere in between. His best-selling book is called The Ultimate Suburban Survivalist Guide, the smartest moves to prepare for any crisis. And we're happy to have him with us today. Sean, welcome to the show.
Thank you very much.
You're welcome. So tell me, what motivated you to write this book, The Ultimate Suburban Survivalist Guide?
Well, we had a year here in Florida where we had 3 hurricanes. And after the first hurricane, I built my own survival pantry and I did a lot of things to my house to really make it safe. But I noticed after subsequent hurricanes, my neighbors lined up at the supermarket every single time. So I wrote a book about how to prepare in place and just to prepare for any emergency, whether it's weather, financial, you name it. And so that's basically why I did it.
So I want to focus a lot about the financial stuff because this is a financial show, of course, but focusing on the non-financial for just a minute first. Other than weather, what other types of non-weather emergencies do you teach people in the book how to prepare for?
Oh, well, earthquakes, of course. I mean, those are ones that you never know when they're coming, but when they come, you have to prepare for those. Forest fires, floods. There's all kinds of things that, they're kind of fun to watch on TV, but they're horrible to have happen to you. And so when those things happen, you can either run around like a chicken with your head cut off, or you can be the prepared guy that everybody looks to help them out of this. And so that's really what it's about there.
That's right. Before every hurricane we have here in southern Florida, you can't get near a grocery store. The parking lot is filled. Everyone's stashing water and cans of tuna fish and everything else.
Right, but if you do it ahead of time, you can just be hanging out at home, mixing yourself a hurricane drink and watching those other people go crazy at the store, So preparing really doesn't take that much more time, and also you can buy things when they're cheaper and just prepare for things and also use things out of your survival pantry over time, so really nothing has to go to waste. You can use it over time as well.
Good advice, very good advice. Let's focus on the financial for a minute now and talk about, tell our viewers about what types of financial crises do you think that they need to be prepared for? Well,
we're actually, there are things that could happen, and I'm not saying they will happen, but I like to be prepared for things that could happen. One fascinating experiment that's going on right now is that we are having negative interest rates at such an extreme rate around the world. About a quarter of the bonds in the world now trade at negative interest rates. We've never done that before. We are pushing the limits on what is possible in the financial system. That can't actually go on this trend for infinity. It has to end somehow. When that ends, what actually is going to happen? Another thing people might want to worry about is like what happens with the US dollar. It's had a great run for a while, but when you look at it, I think that even though the Fed said that it was going to hike rates 4 times this year, then they changed their minds and said 2, and then they said, well, maybe we'll have 1 more hike. They aren't going to hike anymore this year because they simply can't. There's too much pressure on them because it's an interwoven financial system around the globe, and so as things push and pull, you really have to react to it, and so that really ties their hands.
Sure, and I know I tend to go out on a limb a little bit more when it comes to predicting the stock market side because that's really my side, and I know you'd mentioned the fact that that's not your specialty, but you're more worried about how these things could affect the economy.
Yeah.
Let's face it, if the Fed raised interest rates and central banks around the world raised interest rates, especially if the Fed did it, that would help keep the dollar strong. That for starters, and it would solve the negative interest rate problem. But then what would happen to the economy? The economy would go right down the toilet.
Right, and there are these governments around the world that really can't raise interest rates. Look at China, for example. I mean, they have been piling up debt, not only on the corporate side, but in the local government side, like it's insane. They have all these public works projects, which they have to do, because they have to keep people employed, but they go into debt to do it. They can't raise interest rates at this point. They are really trapped. And they have such a tremendous amount of debt. Who do they sell that debt to? Probably big funds that a lot of people might be invested in that they don't know actually own that debt.
Yeah.
There's a lot of this stuff around there. It's a big interlocked system, and so there's just the potential that things could go wrong. Now, the men in the gray suits are trying very hard to keep things moving along and keep things balanced and keep all those plates.
Sean, you're wearing a gray suit.
Well, I am, all right. But I'm not one of those dudes. But they're working hard to keep all the plates up in the air, and they're very good at it. I just worry about what happens if things actually fail. And if things actually fail, then you want to be prepared for it.
So are you looking at the negative interest rates as causing a problem, or are you looking at the negative interest rates as being a symptom of a much bigger problem?
I think it's a symptom of a much bigger problem. And you can look at it in like multiple ways. One is that, just basically writing blank checks. That's how we get here, is they're spending money they don't have. And so there's all this debt, and it just kind of snowballs after a while. The cure for that can be painful, and we haven't wanted to take that pain, which makes, the cure becomes worse and worse and worse. For a while, it was just going to be a bad taste in the mouth. Now it might actually be bordering on poison. So we're not sure how that actually works out down the road, but as long as they don't change the situation, it actually gets worse.
So what do you think that pain is then? Is it just letting interest rates float and not micromanaging the rates as much? And maybe we go into a prolonged recession, but we kind of lick our wounds and then things go back to normal? Is that kind of your thought process?
I think it ends in a prolonged, deep global recession. I mean, that would be the obvious way it ends. Then again, those guys with all the plates in the air, they might have another plan. Frankly, I never saw them doing this huge negative interest rate policy around the world. That was kind of a rabbit they pulled out of the hat. What else are they going to do? I don't know. And so maybe they'll do something really creative, but at some point you have to pay the piper. And so I think the way we pay the piper is with a prolonged global recession. Now, if we get the pain over and then we start to stimulate the economy again in the right ways, I mean, there are bridges that are falling down and stuff we could do like that, right? So if we stimulate the economy in the right ways and actually get things moving correctly, then we can rebound from it. I'm not a doom and gloomer. I just like preparing for things that can go wrong.
No, absolutely, I agree. And the reality of it is right now, Swiss bonds, 10-year Swiss bonds, as you know, have a negative interest rate. So that means you invest $1,000 in a 10-year Swiss bond, and 10 years later, you really end up with $97. That's the extreme example. So we need to take a quick break now. So stay with us. We'll be right back with more from Sean Brodrick. We'll be right back. We're here today with Sean Brodrick, author of the best-selling book called The Ultimate Suburban Survivalist Guide, the smartest money moves to prepare for any crisis. Now, I know you were talking early on about weather crises, earthquakes, floods, everything, tornadoes, things like that. And then we got into the financial side. This show today is really about overprotection. I always talk about the 7 values to keep your money safe in good times and bad. And I've coined this phrase called overprotection. How important do you think it is for our viewers, members of the income generation, to focus on protection, focus on defense when it comes to their money?
Well, I know that as I've been getting older, I've been shifting more and more of my portfolio to things that are safer. I mean, you have to stop taking the risks that you did when you were younger. Then again, your bragging rights come from the crazy things you do, and I think everybody loves to do that too.
That's right,
right. They do. But yeah, you just have to shift more, basically, I think.
Good. And it's funny you say bragging rights. I always talk about purpose versus performance. I talk about some people invest for a purpose. They want to make sure they have enough income, enough of inflation hedge. They want to know they're never going to run out of money when they retire. Others are more performance-based, which means they get pride out of those bragging rights. And that's okay in younger years, but you're right. As you get closer to retirement, you need to become more purpose-based. You need to think about your goals as an individual.
Where I would disagree, and you're absolutely right. More of your portfolio should be protected. But I do find men my age and older really enjoy those bragging rights. They want me to go find them the next big gold mine, because then they get to say, I get into that gold mine when it was under $1 and now it's 20. And so, there is that part of it too, but you have to balance your life.
But they need to be doing that with a smaller and smaller part of their money as they get older.
Smaller part of their money, exactly, right, yeah.
And I know we talked before the break about how interest rates being negative interest rates around the world, even in February, the Federal Reserve momentarily talked about maybe going to negative interest rates, and then they went, oh, we're not going to talk about this anymore.
Yes.
Well, and I believe it's going to come back. There's going to come up in conversation again. And you said you thought that was a symptom of a bigger economic problem that the government the Federal Reserve just hasn't allowed to settle out. But then you also talked a little bit about a couple of other things, the dollar, for example. Now, help me out with this. Help our viewers out, because we hear that a weak dollar is actually good. You know, your concern is the dollar has strengthened. That's been an ongoing trend. That's going to stop. The dollar is going to weaken. We hear, gee, it's great because with a weaker dollar, we can export more goods and services.
Yeah,
but you have a little bit of a counter argument I'd like you to share.
Right. Well, one thing people have to understand is the strong dollar has been so good for them because they're able to buy things on the cheap, including investing in foreign companies on the cheap. When that flip-flops, when the U.S. dollar starts to lose value, you might have more dollars, but they'll be worth less and less, right? So as a corporation, it can be a good thing. As an individual, the falling dollar is not a good thing. There are also other things that can go wrong in a currency. I have friends from like Argentina. They went through a currency crisis like you wouldn't believe. I should say I hope we aren't headed for an Argentina type like currency crisis, but things can go wrong with your currency that can really shatter your concept of how money works.
No, in Greece's debt to GDP was 140% when they really would have defaulted had everybody else not jumped in to rescue them. And we're over 100% already. So we're heading in that direction if we don't change things.
Just a moment on Greece. First of all, they lied their way into the European Union, right? And the handmaidens of that lie were the big banks. They helped them, file all the papers to show they could do it when they couldn't. When the EU came in to bail them out, they didn't bail out Greece. They bailed out the banks to make sure the banks got paid first. Yeah. So Greece is one of those things that could actually wreck Europe if it's a tiny, tiny country, but it's a symptom of what could go wrong in like other countries, Portugal, Italy, places like
Spain,
that.
Sure.
Yes, right. Those things can snowball if they don't take care of it.
But I always talk about the fact that their interest rates, Spain and Italy, for example, on their 10-year government bond is actually lower than ours. But we have a higher credit rating. So it's insane. So as far as the dollar is concerned, okay, a weak dollar is great for corporate America. So if you're a stockholder, you praise a weak dollar. But if you're just an average American consumer, it's a bad thing.
Right, exactly. Okay. I mean, that's just the thing that you have to be aware of is if the U.S. dollar loses 10% of its value, your purchasing power of imported goods becomes 10% less.
Okay, perfect. Now, you mentioned China, and you said China's debt. Well, wait a minute. I thought China was a creditor nation. China owns all of our bonds. They have so much money. That's what everybody thinks. They have so much money. Tell our viewers a little bit about your China concerns. Well,
yes. I mean, the problem is they have racked up so much debt because they've had all these build-outs of all these public work projects to keep people employed. And also they have all these things called zombie companies, which is companies that should fail, but they don't allow them to fail, so they have to keep paying everybody. And so they have these problems, and they just pile up debt after debt after debt. And so that could be a real strain on their currency. Now, they artificially control their currency. They don't allow it to float free. When they do, that could be a wake-up call. Maybe things will work out, maybe things won't, but that's another risk that the world has to face.
So just having billions of people isn't necessarily going to solve that problem over there.
No, it will not. Now, as someone who's interested in precious metals, I love that they have billions of people and they have a cultural affinity to gold.
That's right.
That's great for my business.
Demand. Good. Thank you. Thank you so much for being with us today.
Thanks for having me on.
All good things come to an end. Time flies when you're having fun.
I had a great time.
All those such cliches. And so you heard it straight from Sean Brodrick, author of the best-selling book, The Ultimate Suburban Survivalist Guide, who says, watch out for the men in the gray suits, even though he's wearing a gray suit. Stay with us. As soon as we come back, we'll talk with Morgan, and we'll have a nice conversation about why you should focus on overprotection of your retirement monies. We'll be right back.